what's an interest-only loan and what does it mean? Should you consider it? So an interest-only loan, what that is an opportunity for you to only pay the interest. So you're not paying down principal at all. Principal, again, is you paying the loan down little by little, and over time you're taking more ownership of the property. Whereas interest only, you're not taking any more ownership of the property with each payment. You're paying the same interest. Typically, interest onlys are fixed in place as an ARM product for a certain period of time, and then after that, they become both adjustable and principal and interest. So if you have a 7-year interest only, for instance, you get 7 years to pay interest only. After that, you typically have 23 years to pay off that loan with principal and interest payments, so your payment goes up quite a bit. So why would you choose one of these things? Most people that choose interest only are looking for cash flow. So they love that extra money that they'd be paying down on principal left on the sidelines to be able to turn around and go invest elsewhere. So that's a huge advantage for them because they believe they're going to be able to make money elsewhere at a better rate than paying down this mortgage. The second piece is certain people have quite a bit of money coming their way at some point in time, and they'd rather be able to take a big chunk of that money when that time comes, pay down their loan, and see their payment update immediately. So if you've got an interest-only payment and you are paying a loan of $500,000, now you pay it down to $300,000, you're now just paying interest only on the $300,000, and your payment updates accordingly. That does not happen with a 30-year fix. The 30-year fix, if you pay it down from $500,000 down to $300,000, your payment still stays the same unless you go back to the bank and ask for what's called a recast, which I've talked about on other videos. So interest only allows for nice cash flow, and it allows for bigger payments to impact your payment going forward on a monthly basis, which is really nice for certain people. I find that investors like this a lot. If they own multiple properties, it tends to be the way they like to go. Here's the challenge with interest only. Again, you've got that big looming heavy increase in payment eventually. So if you aren't sure about the time frame that you're going to hold this loan and you need more certainty, this is not the way to go. The other piece is it's much harder to typically qualify for these interest onlys, and they tend to come with a slightly higher interest rate than an ARM product, a traditional ARM product. So there are reasons that you might not be interested or unable to get an interest only because of qualification. But is it worth looking into? Absolutely. If it's something that you're looking for cash flow, something that you're okay with not paying your mortgage down month over month basis, you'd rather just take the equity that comes to you based on price appreciation and use your money elsewhere and have good plans for that, interest only could be a worthy dissection and just looking into whether that makes sense for the other loan products. Shoot me questions below. Please subscribe. Please comment. I'd love to help you out and make sure you're making all the right decisions around home finance. That's what I'm here for. That's what I do every day.